Many people see the world of crypto as a giant, unpredictable casino. It's often associated with massive price swings, coins named after internet jokes, and founders who remain completely anonymous. But the biggest names in finance are using a different kind of technology. Today, BlackRock is moving real US Treasury funds onto a digital ledger. They are joined by 8 of the 10 largest property insurers in America, who are already using this platform for their daily work. Even tech leaders like Nvidia and Accenture are currently building new systems on it. This network has also reached a rare milestone with the government. The US Securities and Exchange Commission officially classified it as a digital commodity, giving it the same kind of clear legal standing as gold or oil. Global finance is moving on to a ledger that the general public still barely knows exists. That network is Hedera. Think of it as a private, high-speed digital superhighway designed specifically for the world's largest companies to move information and money. Driving on this highway requires a toll, which is paid using the network's native coin, HBAR. It functions like a mandatory digital easy pass that every business must use to access the road. We're going to look past the hype to see how this network actually creates value, check the math on how many coins exist, and look at what the recent price movements mean for investors. Hedera is a software tool built for the corporate world, making it a rare example of a project that is very quiet but carries immense potential. For a long time, huge companies stayed away from crypto because they couldn't risk their reputation on networks run by strangers. They need to know exactly who is in charge. Hedera solved this by creating a governing council made up of some of the most famous businesses on Earth. Names like Google, IBM, Boeing, and Deutsche Telekom are the ones actually securing and managing the network. Because these well-known giants are in charge, the network is held to a high standard. That professional oversight is a major reason why the government gave them such a clear legal green light. The way the system works is simple. Every time a company moves data or records a transaction on this highway, they are charged a small software fee. These companies cannot pay those fees with cash. They are required to use HBAR, which means these massive corporations have to constantly go out and buy the coin just to keep their business running. This creates a direct link between the network's success and the coin's value. The more these giant companies use the highway, the more HBAR they have to consume. Before we look at the price, we have to look at the supply. If too many new coins are created, it can make each individual coin worth less over time. Hedera has a very strict limit. This container represents the total supply. Only 50 billion HBAR can ever exist. No more can be created, and none are being destroyed. Right now, over 43 billion of those coins are already out in the market. That means about 86% of the total supply is already being traded by the public. This is good news for investors because it means there isn't a huge amount of new coins waiting to flood the market and drive the price down. The small amount left is trickling out very slowly over many years. Since the supply is mostly fixed, the price will depend almost entirely on how much demand comes from those big companies using the network. HBAR is trading around 10 cents, with investors patiently accumulating. In September 2021, it climbed to 57 cents before falling back. It's still 82% below that peak, leaving massive room for growth. However, it first needs to break a stubborn resistance level between 13 and 15 cents. People who study the charts are waiting for the price to climb above that 15-cent mark and stay there. That would be the first real signal that a much larger move upward is starting. So what's the verdict? The biggest strengths are the massive companies using it and the clear laws that let big institutional money feel safe coming in. But there is a catch. When those big companies pay their transaction fees, that money doesn't go to everyone who holds the token. It goes directly to the people running the network's hardware and the companies on the council. Because of that setup, a huge increase in network usage doesn't automatically mean the price of your tokens will go up at the same speed. Also, some people in the crypto world don't like that a group of giant corporations is in charge. They would prefer a system where no single group has that much control. Ultimately, Hedera is built for the traditional business world. If you're a patient investor, you're betting that these giant companies will continue to move their operations onto this ledger over the long term. Do you think having big corporations on board is enough to help HBAR reach its old highs again? Let me know what you think in the comments. And as always, this isn't financial advice. Make sure to do your own research. If the future of global finance is going to be built on these digital highways, Hedera is already well ahead of the pack.